Europe condemns the future of Tether to its disappearance. 60 American banks are on the verge of collapse, and Russia threatens the United States with de-dollarization. 15 days remain before the MiCA regulations for stablecoins come into effect in the European Union, and so far, few exchanges have announced how they plan to comply with these new rules. Juso Roinivita, head of product and growth at Membrane Finance, highlighted on Platform X the potential fines that platforms trading unregistered stablecoins in the region might face. According to Roinivita, these fines could reach up to €1 billion, considering only 10 of the platforms currently operating in the Eurozone and processing transactions with dollar-pegged stablecoins. Roinivita shared a table on social media showing that the amount of fines increases according to the number of dollar stablecoins traded and the volume of transactions conducted. The MiCA regulation stipulates that fines can reach up to 12.5% of the total annual turnover. This means that exchanges offering unregulated stablecoins, such as UST, which is dominant in Europe and worldwide, could face significant sanctions. For a stablecoin to be considered regulated in the European Union, it must be issued by an electronic money institution known as EMI or a credit institution, a CAI. Stablecoin issuers must apply for a permit from these entities. So far, like OKEx, Kraken, and Binance have announced their plans to comply with MiCA and continue trading with stablecoins. There is no information on the measures that other platforms will take. Oliver Lynch, CEO of Bittrex Global, mentioned that as the critical June 30 deadline approaches, companies still face some ambiguities about the new rules and lack clarity on how to apply them. As for stablecoin issuers, it is known that USDT will not comply with MiCA regulations and is expected to exit the European regulatory market starting in July. On the other hand, its main competitor, USDC, will remain active in Europe thanks to its registration in France. Paolo Arduino, CEO of Tether, explained that the liquidity and reserve requirements approved in MiCA prevent the operation of USDT and other stablecoins. Cristina Carrascosa, a Spanish lawyer specializing in crypto assets, expressed her skepticism on X about the new regulation, questioning the restrictions imposed on dollar-pegged stablecoins as a measure to protect the euro. Carrascosa commented, "The overprotectionism that the European Union has tried to enforce for its financial stability has strangled the usual business of relevant stablecoin issuers, who will have to be creative to maintain the same levels of profitability before and after MiCA." Her opinion adds to those of other European analysts warning that these regulations could isolate Europe from the rest of the world. And here, there is only one possible scenario for exchanges. They must quickly adapt to the changes if they don't want to lose their market share, which I have no doubt they will do. As for stablecoin issuers, they must find a way to remain profitable with the new rules imposed by the MiCA law in Europe from June 30. It should be noted that this does not mean or imply the end, far from it, of cryptocurrencies. Nothing could be further from the truth. Exchanges will simply remove those stablecoins that do not comply in Europe and use others. How this will affect you as a trader and operator is that you will trade with another pair that exchanges will propose. Nothing changes. The only ones who get screwed, to speak plainly, are the stablecoin issuers who fail to adapt, being clear, frank, and direct.
Last week, the Federal Deposit Insurance Corporation (FDIC) published a report revealing serious problems in the U.S. banking sector. Firstly, it noted that 63 banks were on the brink of insolvency during the first quarter of 2024, meaning they almost couldn't meet their financial obligations. Additionally, the report showed that banks are accumulating unrealized losses totaling $517 billion, which is $39 billion more than the previous quarter. The FDIC highlighted that this is the 9th consecutive quarter of unusually high unrealized losses since the Federal Reserve began raising interest rates in the first quarter of 2022. In other words, since interest rates started to rise, banks' potential losses have been increasing. Another factor to consider is that the Bank Term Funding Program, BTFP, designed by the Federal Reserve to prevent financial collapses, stopped accepting new loan applications last March. This program had been crucial in helping banks remain stable. The current complex banking landscape reminds us of last year's crisis when, in a few months, regional banks Signature, Silvergate, and Silicon Valley went bankrupt. These banks collapsed because their clients, mostly tech and cryptocurrency companies, massively withdrew their deposits seeking better savings rates elsewhere. After these events, banks have had a year to adapt to higher interest rates and can still borrow from the Federal Reserve through the discount window. However, the closure of the BTFP will likely increase banks' borrowing costs, reducing their profit margins. To compensate, banks may raise interest rates or restrict available credit, which could further weaken the economy.
And now, pay attention as Russia accelerates its digital trajectory to evade sanctions and promote de-dollarization. Since the start of the war with Ukraine in 2022, Russia Russia has faced a package of sanctions imposed by the West, which has significantly impacted its economy. In response, the Russian government has intensified its de-dollarization efforts to reduce its reliance on the US dollar and mitigate the impact of the sanctions. In this context, Russia is prioritizing the launch of its central bank digital currency, the digital ruble, which has been in development since 2021. Anatoly Aksakov, a Russian legislator, explained that the goal is to integrate this digital currency into international trade as a way to evade financial restrictions imposed. The digital ruble trials began in August 2023 with the first phase of a pilot. That same year, a law was passed that not only incorporates the digital ruble into the Russian financial system, but also grants legal status to digital currencies from other countries. This is part of a broader effort to modernize the country's payment system and make it less vulnerable to external sanctions. Aksakov predicts that in the next 5 years, the digital ruble and other CBDCs will play a crucial role in international trade, providing Russia and other countries with an alternative to dollar-dominated financial systems. This move is seen as a strategy to strengthen Russia's economic sovereignty and secure its position in global trade, despite Western restrictions. Therefore, the acceleration of the digital ruble is a strategic response by Russia to economic sanctions, seeking to establish a more autonomous and resilient financial system in the face of international pressures.
Let's analyze Bitcoin on its 4-hour time frame. Here we can see the bullish impulse that took us to the last all-time high of $74,000. After this impulse, a defense zone was established, and notice how it has been defended. Additionally, an accumulation has formed over this defense zone, where we can see a market trap that indicates trapped sellers. This trap shows us seller weakness, which gives us strength to rise. Notice how after the bullish impulse, another defense zone was established. This defense zone tells us that all of these buyers are defending this price level. Zooming in a bit, we can see a bearish impulse followed by a channel and a range. Therefore, we could expect after this movement a bearish climatic action, which could even take the form of a trap below the defense zone. After the climatic action, we could recover the defense zone and break the creek to the upside, since all this would be a bullish accumulation. And now let's analyze Ethereum. But first,
welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity.
let's look at the Ethereum chart in its 4-hour time frame. We also see the last bullish impulse that took us to Ethereum's recent high near $4,100. After this impulse, a creek was established, which we are now tracking. Here, just like with Bitcoin, we see a bullish accumulation that led to this strong bullish impulse. After this strong bullish impulse, we see a bearish distribution process that has reached its institutional target number 1. And how did it reach this target? Well, it arrived in a corrective pattern since we have a bullish impulse, and then we can anchor a W, a Y, and we are now in a Z, specifically in a wedge. And notice what we mentioned in previous videos about this wedge. Hey, we're in a Z, the same. Can you continue? We don't know, but after the wedge broke, we see a bullish impulse that has stopped right at the creek, which is the guideline of our Z. This bullish impulse is now undergoing a corrective pattern, which we expect to continue as we are conducting a cross analysis with Bitcoin, where we are expecting a climatic action. Then after this correction, we would expect an upward breakout of the creek corresponding to this accumulation process.
And what do our friends the altcoins tell us? Well, look at Solana. Observe how after the big rise, a macro defense zone was established, and at the same time, they have worked on this zone, just like Bitcoin and Ethereum. As you have seen from my colleague, here they have worked on a bullish accumulation process, which, if we zoom in a bit, notice the micro defense zone we are working on now to understand how, after this bullish impulse, we see a W, a poor Y, and all this is a Z, clearly a significant one. That is why we are evaluating these bearish climatic actions in the crypto ecosystem, as altcoins like Solana are working on a Z, which could continue, make a trap if it wants, something like that, and then reverse and break through that structure. Remember, we have been saying since this drop that the price would have inertia to continue falling in the entire crypto ecosystem to keep absorbing, and we think exactly the same. Cardano tells us the same, though we won't recall the macro structure, but I will tell you that here we have a strong adverse bullish impulse, where here is the AW here, the poor I, and all this is a Z that can't handle itself. So as long as we are in a Z, friends, we keep going down. Hence, a tricky climatic action might come. Look, It would be good to make a structural trap at this level, to scare, to create fear, then turn around and break the wedge with great force. Imagine something like this. We are expecting climatic actions, and remember that the analysis you are seeing today is in the 4-hour time frame, and we are analyzing it from a very broad perspective. Don't lose focus or you'll get completely lost. For DOT, we have a macro defense zone between the price levels of $6.32 and $5.99. On this, we are speculating about a macro bullish accumulation. Zooming in a bit, we notice how this recent drop seems to have been blatantly absorbed. Look at the volume. In the end, in our opinion, the accumulation process still needs to take shape here. We'll see how it unfolds, but there could be a tricky climatic action that comes to scare everyone and then break the advanced guideline, which could be a prelude to attacking the creek and subsequently confirming its breakout. In other words, we are positive about the cryptocurrency ecosystem in Bitcoin, Ethereum, Cardano, Solana, and Polkadot. We are positive but expect tricky bearish climatic actions. If you like this video, let me know in the comments. Also, give this video a like, subscribe to the channel, and click the bell so YouTube notifies you of future posts. Good luck with your trades and see you next time.